Good evening, ladies and gentlemen. I know I promised that I was going to do a video on Star Citizen next, but it must be the season for controversy surrounding crowdfunding projects because a more promising target has hoved into view and I've decided to get to it first. So the topic of this evening's episode is going to be Tim Schafer and the recently announced crowdfunding project to fund a sequel to his well-beloved 2005 classic Psychonauts. But before we get deeper into the meat of this video, let us first go through some history. First, the history of Tim Schafer, game designer. Tim got his start working for the Grand Poobah of adventure game design, LucasArts. He co-designed Monkey's Island 1 and 2, as well as Day of the Tentacle, which are regarded as some of the best games in the point-and-click adventure genre. As a solo designer, he is known for Full Throttle and Grim Fandango. After Grim Fandango, he left LucasArts to found his own game design studio, DoubleFine, and has been with that company in the ensuing 15 years. DoubleFine's first title was Psychonauts, followed by a long-running series of games in different genres such as Costume Quest, Brutal Legend, and Massive Chalice, many of which were met with audience approval and a decent amount of success, and it would be fair to say that DoubleFine have built up a cult following over the years. Anyway, now to the history of Tim Schafer, financially responsible adult working in the games industry. You see, the financial troubles for DoubleFine stretch back to Psychonauts, which was delivered way late and way over budget according to several sources, and the initial sales of Psychonauts were actually pretty disappointing to say the least, but the real trouble didn't really start until 2012 when we entered this unfortunate era of crowdfunding we find ourselves in. Tim Schafer decided that it was time for him to go back to designing adventure games after his previous, more action-oriented fare, and so in 2012 DoubleFine decided to launch a Kickstarter for a game generically titled DoubleFine Adventure. The initial goal for that campaign was $400,000, but by the end of the campaign they had raised $3.3 million, which was far in excess of what they had asked for, which made the campaign one of the most successful in crowdfunding history up until that point. That was when the trouble really began, because essentially, given this much larger budget, Tim Schafer, in his own words, designed too much game, and essentially they ran out of money. So in 2013, in order to finance the project, they had a brainwave. They released the first half of the game on Steam, and then used the money from sales of that to complete the rest of the game, and then gave the full game to backers. This was a very controversial move by Tim, because many people found it difficult to believe that DoubleFine had got all of this money above their goal and then suddenly ran out, prompting uncomfortable questions like, were they ever going to complete the game at $400,000 in the first place? Things only got worse for DoubleFine in 2013 when they announced and began development on a Dwarf Fortress clone set in space called Space Base DF9, which funnily enough also required $400,000 to develop. Essentially they had initially launched this game on early access and sales were strong enough for Indie Fund to recoup their $400,000 of investment in the project back in just 2 weeks. However, once again, you guessed it, they ran out of time, money and resources to deal with the project and decided to just launch a half-completed game and then dump the source code for the community to literally finish the rest. As one would imagine, this didn't go over very well with the community. Now, I mentioned the preceding two incidents because they're going to be very important in framing the rest of this video. We have the first Kickstarter disaster that was Broken Age in 2013, and then we have the second case of financial woes in Space Base in 2014. Well, it's very late 2015 now, so once again we have another DoubleFine crowdfunding project, this time a proposed sequel to their first game, Psychonauts. This campaign, however, is slightly different. This time the campaign is being run not by Kickstarter but by another crowdfunding website, Fig. Now, Fig is a rather complicated organization and we'll get to that complexity in a second. All that matters for now is that Fig is a crowdfunding platform that is closely tied to both Tim Schafer and DoubleFine. After all, Tim Schafer is on the advisory board of the company who owns Fig, along with gaming luminaries such as In Exile's Brian Fargo. Now, being so closely tied to the platform you're actually raising money on does also yield certain benefits, such as the ability to extend the dates of the campaign out on a whim in order to be sure of meeting your target when it looks like fundraising isn't doing so hot. Ostensibly, Fig is a crowdfunding website in the image of other sites where people can pledge money towards projects for t-shirts and copies of the game, etc., except for, of course, Fig only focuses on video games. Now, in that respect, it works like any other crowdfunding website, but what makes Fig unique, and this has been touted about endlessly in the media, is the ability to invest in games through the platform and to earn a return on your investment from the sales of a game. It is this investment angle that I'm here to focus on because, believe it or not, it is a diabolically bad deal. But before we move forward, it is probably best to discuss further what Fig are trying to do. You see, normally in order to invest in the shares which they are offering, you need to have accredited investor status with the Securities and Exchange Commission in the US, the SEC for short. In order to become an accredited investor, you need to have a net value of $1 million, not including your primary house, or have an income of $200,000 a year for the last 2 years in order to even qualify. This presents a challenge for Fig because most of the people they're trying to attract to invest are smaller people, i.e. the general public, who for the most part don't have access to that kind of money and therefore can't be accredited. Luckily enough, there are exemptions which are coming in to allow them to sell shares to unaccredited investors, and these exemptions are already being passed into law via the Jumpstart Our Business Startups Act, the Jobs Act, which was signed by Obama in 2012. So for the moment, however, they are only able to offer people the right to reserve shares instead of selling them shares outright until, of course, the necessary changes come in early 2016. So anyway, let's review the investment page of the website, which actually does lay out the deal for investors in Psychonauts 2. The terms are as follows. For each $500 invested in the game, you will make $2.50 for every $68,376 in adjusted gross revenue until the 13.33 million mark, and after that they get $1 for every $68,376 in adjusted gross revenue. So as the kind folks at Fig have given us a calculator based on a $21 retail price, it would take selling close to 700,000 units for the investors to make a 0% return, otherwise known as break-even. From there, returns are actually pretty decent, with investors making around 60% return if the game manages to sell at around the same level that Psychonauts 1 did in 10 years. So let's get into the sales figure for Psychonauts as presented by Fig. The 1.7 million or so sales are mostly made up of Humble Bundle sales and sales from the Steam store. So in terms of the Humble Bundle, Psychonauts has been a part of 2 bundles where it was packaged with a whole lot of other games, so at best it sold for around $1 a copy, which is quite a far way away from the $21 that they're calculating on. On Steam, the game hovers at around the $10 mark, with half the people owning the game not even playing it, which could possibly be down to people just buying it when it was cheap and then never looking at it again. Now, if we ignore GOG and Humble Store purchases because those numbers are quite low, that just leaves us with the original sales figures of around 500,000 retail sales in 5 years. This figure is arguably far more representative than the Steam figures and the Humble Bundle figures when it comes to assessing Psychonauts' performance in a retail environment at a premium price rather than in an online bargain bin. So putting those points aside, if you scroll down the page past all of the marketing materials, you'll eventually get to this little block of text hidden at the bottom of every page on the Fig website. It's such an important message that it's hidden right down there along with the terms of service and things like that. In amongst the legalese, you find this. All investors using the site must acknowledge and accept the high risks associated with investing in the securities. These risks include holding your investment for periods of months or years with limited or no ability to resell and losing your entire investment. Now, this is an intriguingly vague statement. I mean, what are these precise risks that are being discussed here? If only there was some sort of cachet of documents relating to the offering, the business, and all of the information about these securities that shows us what is going on at Fig behind the scenes. Well, guess what? there is. You see, every time a company like FIG wants to make a public offering of securities, there's a considerable amount of paperwork that has to be filed with the SEC for transparency purposes. All you need to do is search for the right thing through the SEC's website and voila, there it is. You have a ton of information on the company. It's just public enough to be legal, but not public enough to find if you don't know where to look or what you're looking for, and fortunately enough I do. The documents in question, all of which are linked down below, comprise of hundreds of pages of information that lay out a complex series of shell companies with agreements between each other that all together comprise of this entity we shall just call FIG in general. What is going to be exceedingly important going forward is that we all understand that FIG the website is run by Loose Tooth Industries, and FIG the game publisher, who you're actually putting your money into, are two entirely separate legal entities, despite FIG Publishing Inc., the company you're investing in, being a subsidiary of Loose Tooth Industries. So the entity which we will focus on here is going to be FIG Publishing Inc., because it is the entity which will be taking in investor funds and then moving them downstream. So as an overview, FIG Publishing Inc. is a San Francisco-based company incorporated in noted corporate tax haven, Delaware, like the rest of all of these shell companies, and which boasts two staff members, one of who is Justin Bailey, former DoubleFine COO. Now, out of all of these business documents, a full archive of which are once again linked down below, there's one document in particular I want to focus on, namely the initial offering circular, which is sort of like a prospectus given out by the company to potential investors. What makes this document so valuable is that it contains every possible bit of information on the business, details of the stocks, detail of the shareholder rights, and full financial statements, because if they tried to hide anything or if they left anything out of this document, under the regulations it would be security fraud. So you see, I don't have to make an argument, and this isn't my opinion that this is a bad investment. All I have to do here is simply quote you back some of their own document. So for starters, as an investor, what are you really buying? Well, FIG Publishing Inc. has taken the liberty of issuing 30,000 shares at a par value of $0.0001, and it is selling these shares at $500 each to the public. So for $500 you get exactly one share. This is an offering being made under Regulation A of the Securities Act 1933, which will allow non-accredited investors to invest in these shares due to the exceptions which are being passed into law, as I said earlier. So as a stockholder in FIG Publications Inc., what rights do you get? Well, according to the circular, the only significant right that you get is the right to a dividend, which is going to be 97.5% of the earnings related to a specific game, but of course only once DoubleFine have taken their cut off the top, and they can simply of course choose to not pay you at any time, and so it's not really that firm a promise. Additionally, you get no voting rights and no rights of any sort against the company, and probably the best part, pursuant to Rule 144 of the SEC, you can't trade these shares for 6 to 12 months once you have them. But of course this deal keeps getting better and better. 20 pages out of the 70-page report are dedicated to discussing all the possible things that can go wrong, i.e. the risks of investment. I'm only going to scratch the surface with these, but here are some of my favorites, and I quote, "We've incurred significant losses since our inception, and we anticipate that such losses will continue to be incurred in the future." That's right, the company you are investing in, FIG Publishing Inc., not DoubleFine, not their company that runs the website, but the company that you're putting your money into, is absolutely hemorrhaging money. One look at the included financial statements show you that they made a $400,000 operating loss in their last period, and that they have just $120,000 in assets to cover some $240,000 in current liabilities. You don't need an accounting degree, which I have by the way, to work out that this company is headed straight for liquidation, barring some sort of miracle. So hopefully that gives you an idea of just how financially screwed this company is. Our independent registered public accounting firm has expressed in its reports on our audited financial statements a substantial doubt about our ability to continue as a going concern. This basically means that the accountants don't think that the business is going to survive another 6 months to a year tops. Our operations have been and will continue to be provided and financed by our parent, Loosetooth, which is also in its early stages. Our parent has no obligation to continue to provide and finance our operations except as required under the Master Services Agreement. So here's the deal with this. Fig Publishing Inc., which is the company that once again you'll be giving your money to, is only around because Loosetooth Industries are propping them up. Fig Publications is at the moment just racking up expenses and expenses and expenses, for example the cost of publishing the game, and not paying any of these with the money that comes in through crowdfunding. Instead, their parent company will pay for the expenses now, and if and when the game makes a profit, they will pay their parent company back. If, however, their parent company, and bear in mind there's significant overlap between these two companies, wanted to just sever this agreement, then Fig Publishing would just disappear down the memory hole, taking its promise to pay investors a dividend along with them. Furthermore, there could be circumstances in which assets attributed to one series of game shares were used to pay liabilities on another series of game shares. This means that basically they can take your money and use it to pay for a completely different game if they want to. In certain circumstances, in the event of a liquidation of our company, holders of any game shares may not have a priority with respect to the assets attributed to the associated series of game shares remaining for distribution to shareholders. What this basically means is that if the company goes bust, you are only going to get paid after the creditors and after Loosetooth pay themselves. And considering they only have $120,000 of assets and are totally insolvent, this basically means you're not going to get a single fucking red cent back. So, at the risk of repeating myself, let us go through this investment that I've just laid out. You'll be investing in shares with a par value of $0.0001 going for a premium of $500 each. For your purchase, you get no voting rights or rights against the company, and you have to hold the shares for at least 6 to 12 months. The business's accountants have expressed a doubt that the business will even be around in the next 6 to 12 months, and the business is leaking money. In the event that the company does go bang, you're obviously not going to get anything because the company is already insolvent. And you'll be taking all of this risk on, all of it, with only the promise that eventually, maybe somewhere down the line, the game comes out and turns enough of a profit for you to get paid if they're feeling generous that quarter. Not even Jordan Belfort could sell this fucking shit. The nastiest part though here is the corporate structure once you understand it. It's a complicated series of tubes that ultimately leads to a chute straight down into Tim Schafer's money bonfire. You see, what we're looking at here at the end of the day is a very carefully built financial death trap. If Fig Publishing were to go under in the next 6 months, what would happen? Well, all of the investors would be unable to sell their stock by law, and as the only rights that they have are to a profit through the company, they would literally lose everything. And there we get to the best part. What would happen to all of the money that the investors put in? Answer, it would stay exactly where it was intended to go, with Tim Schafer and DoubleFine. You see, the second that the game's crowdfunding closes successfully, it all goes through Fig Publishing to Fig's subsidiary called Fig Grasslands, and then that goes straight to DoubleFine. This is called the game funding payment. You see, none of the money you're putting in is going towards publishing the game, it's only going towards making the game. Even if Fig Publishing was to collapse, the game would still be completed as if nothing had ever happened. All that's changed is that the investors have lost their money. They could just self-publish the game or publish it through other people as they've done before. It is quite literally free money without the expectation of even a cheap, well, maybe not so cheap, t-shirt in return. You see, in my opinion here, there's a very sad and ugly truth as to why DoubleFine and their partners want to get mom and pop unaccredited investors into investing in game projects. And it's not a Horatio Alger wet dream of you too can profit from this game's success. The real reason is that no sane investor who knows anything about money or who has acquired a substantial amount of it, would touch this crap with a 10-foot barge pole. In finance, intelligence and experience correlate with wealth, and so essentially what they're doing is hoping to lure in people who are bad at reading the fine print in order to offlay all of the financial risk of publishing a video game onto these suckers instead of going to an actual games publisher, or better than that, they want to get these suckers to publish their game for them without even having the most rudimentary protections spelled out in a standard publisher contract, like for example the ability to make sure your money isn't being thrown on a large bonfire. And perhaps worst of all in this situation are the gaming media, who are the ones who should have done the research and found out all of the information that I've presented to you in this video, instead of crying the praises of Lord High Inquisitor Schaefer and showing you the way to the promised land where he shall lavish profits upon thee. I've been Dangerous Analysis. Follow me on Twitter if you so desire. Thanks to everyone for subscribing, and as always,
good night and good luck.